that have just joined us, if we'll just give everyone another minute before they get here. For those that weren't part of the previous session we held was regarding calculating and comparing fees with invoice finance. And one of the interesting parts of today's session, this session about trade finance, is I suppose the difference in the cash flow cycle. So for those that are completely new to this space, if you look at your cash flow cycle as a business, there's only two ways you can really look at impacting your cash flow. You either delay the amount of money that you are paying to your suppliers, or you bring forward the money that is owed to you by your debtors. Now, in the previous session, we talked about the money that bringing forward the monies that are owed to you from your debtors. And to keep things very simple, and I'll get Patricia to kick us off, trade finance really is looking at the other way in terms of how I delay my payments down to suppliers. But if I'm talking to my clients, obviously, I don't want my suppliers to be delayed in their payments. So Patricia, maybe you can explain trade finance just as a basic for everyone on the call. I will kick off just in the interest of time, and there will be others that join us that will kick off. So Patricia, help us out, help me understand.
All right. So trade finance, it's essentially a working capital finance solution. It requires you to bridge the funding gap between when the borrower is buying their stock and selling their goods to their customers. So essentially, a lot of suppliers, I guess, if you talk overseas suppliers, they require a deposit and a payment upfront before the goods even gets produced, before it's shipped, before it's clears custom, before it gets delivered to you and to your customers. So it's about bridging that cash flow gap. Now, if you're actually getting, as Chris says, if you're able to extend your credit terms with your supplier, then to the point where you actually get to deliver the goods to your end customer, then you don't actually need a trade finance solution. But I would say that, if you're dealing with anyone overseas particularly, that's when a trade finance solution comes in play.
That's an interesting one, Patricia, because I know Brendan with his, I notice he's changed his picture now. He's decided to rewind the clock back 20 years with that lovely picture. Did you decide not to go with the video, Brendan? What are you doing?
Yeah, my IT just, anyway, it doesn't matter. Yeah, look, what Pat's saying is certainly true for some trade financiers, that their focus is on imported goods. And Octet was also actually for many years focused on imported goods. But these days we're about 40% paying local suppliers and 60% dealing with imported products. So, and we've really expanded it where we used to be very much just focused on goods. It's not only not only goods anymore, it's services as well. So really trade finance is just to make it very simple, is really just forming the function of a loan that's a cash flow loan. Now, it happens to be drawn down by paying suppliers, be they domestic or be they overseas. But the way we use this facility is just like any other working capital loan. So we really don't have to make it too complex.
I wanted to touch on another aspect of what you were saying, Patricia, as well. Yep. And I'll be interested to hear Brendan's thoughts as well. Mm-hmm. Just because a client is looking and gets their 60 days from their supplier, I can still look at trade finance and buy additional time if it suits my cash flow, can't I?
Yeah, of course. Well, it depends really. I mean, if let's say, as Brendan said, he's funding local supplies. In fact, ScotPac do fund local supplies as well. But if you are getting terms from your supplier, let's say 30-day terms from your local supplier, and you have the ability to deliver that to your customer, then why use a trade finance solution? You should be using a debtor finance solution. And the reason for that is because debtor finance or invoice finance is going to be a cheaper option for you.
It's an interesting one, isn't it? Because, I mean, for me and the way I look at debtor and trade, I look at it, and for a lot of people, when they look at debtor finance, and for those people that tuned into our previous session, debtor finance, a lot of the debtor finance options, you pay on your total turnover, whereas on trade, I can turn around and pick and choose when I need to bring that as well. So there's a lot of benefit to doing so. If I've got someone that might be a slow payer on the debtor side, they might go past the 90 days. Whereas if I've got suppliers, then maybe I can look at that side of things as well.
Yeah. Yeah, well, I guess now there are a lot of providers in invoice finance that's actually that allows you to pick and choose invoices. But I think the other key thing, Chris, when you're looking at the trade finance solution, I mean, I was speaking to a client the other day, and we offered her 90-day terms to import some goods for a major Australian retailer. And we charged her probably just under 3%. And what she said to me afterwards was that, oh, Pat, do you realize I can actually get a 10% discount from my supplier? So by using our trade funding solution, she's actually making a margin from it.
Look, you're stealing the thunder, but
sorry.
No, that's fine. I mean, in my personal opinion, I couldn't agree more. The best target for trade and to a lesser extent debtor clients, really, if someone is offering a discount for paying early, trade finance is absolutely perfect. Now, I'm going to flip to Brendan. I wish Brendan would show us his lovely face in real time, but instead we've got this lovely picture. We'll take what we can get, Brendan. I appreciate it. But, mate, one of the things I was probably most surprised about, and one of the things that I think there's a lot of businesses post-COVID that they're not going to have the same levels of security they may once have. So the people that were looking at your traditional overdrafts and different products, they wouldn't have had, a lot of them won't have that property security to fall back on. So looking at something like trade is quite helpful. But then one of the things that really sort of struck me as someone who sort of plays in this space is the fact that most of the trade credit insurers that were around decided to turn their toes up, and at the moment we don't have as many options. So how has that impacted yourself in terms of the fact that there's not a lot of trade credit providers out there?
Yeah, look, I guess you'd have to say, look, the banks still dominate trade in Australia. So for that part of the business fraternity that's well banked, then those facilities are still available. I think the point that's interesting that you raised, Chris, is most of bank trade finance is secured by property. And what we're doing a lot of is providing additional facilities, often leaving those bank facilities in place, but we might be just tacking on, whatever it is, $1 million, $2 million, whatever it is, on top of the existing bank facilities. We're taking a second charge behind the bank. We don't deal with the deed of priority. So it's a really nice, easy way to tack on working capital muscle into the business without impacting your bank. And so that's attractive to a lot of people, particularly, they may use that bank facility. It might be perfectly good for them for most of the year, but in that sort of 3 or 4 month run into Christmas, they'll draw more heavily on the Octet facilities. And of course, there are other clients where we're providing a trade and debtor piece and taking the bank out all together. It's really horses for courses.
What are the sort of areas that, so Patricia made mention before about clients from overseas. Is there any particular industries that you seem to be finding that are really utilising trade finance successfully at the moment post-COVID?
Yeah, look, there is. I mean, definitely PPE is one. So we had a client the other day settle an order for 60 million face masks. So that's a lot of face masks. So, we're definitely seeing some of that, but it's really interesting. I think we've probably all seen this. It's quite surprising to me, some of the industries that are booming in COVID. And, we definitely have clients in hospitality that are impacted, but we have other clients that are really just going gangbusters at the moment. But it's quite diverse, it's quite spread. So I would say, aside from that PPE opportunity. Actually, Chris, one of the points I did want to make too, in respect of the local suppliers, because what Pat's saying is exactly right, that debtor finance, generally speaking, is slightly cheaper than trade. The one point you've got to remember with your local suppliers is in an Octet scenario, we're providing 90 to 120 days credit. So it's significantly more credit than you would typically take from any reasonable supplier. And to Pat's point, you know, even if you got 30 or 45 days, you may well be able to pick up, whether it's 10%, but even if it was a 2 or 3% settlement discount for paying early. So I still think that local suppliers, that is a really strong driver across a range of businesses, particularly over the last 4 or 5 months.
How, and Patricia, maybe you can help me here, if this is the first time you're looking to offer trade or to talk trade finance with a client, what are the sort of things that I need to be aware of? And I bring this up, and I've in the sessions today, I'm very conscious that for a lot of people, there is a risk there of talking about a new product and service without actually having the background and the knowledge to follow up on. So can you help me understand a little bit more about what are the things that I need to be aware of for client? What are the things that can go wrong?
Well, I guess, you know, if you're a broker and you're speaking to your client, typically, if let's say your client is a wholesaler or an importer, he might have mentioned that he's got an order that he can't fulfill, or he might have mentioned that with one particular broker of mine, where he said to me that one of his clients had 500 to 1,000 additional SKUs that they need to bring in for one of their major customers, and they're thinking of different ways of doing it. So, you know, that's kind of how do you call it? The key point where, you know, that's how you identify that opportunity, because the question then is, how are they going to fund it if the supply, if they're purchasing it from anywhere in Asia, the supplier definitely will want the payment upfront before the goods comes in. So how are they going to fund it if they don't have sufficient bank funding? Then utilizing a trade funding solution from non-bank funders like Octet or even ScotPac, where we're actually providing them additional line of credit without asking for additional security. And just to your point just now with regards to, you know, it's interesting that ScotPac itself, and Chris, I know we've spoken about a few clients where we used to ask for credit limits, insurance limits. But since COVID, you're right, the underwriters have stopped providing, or they're very conservative in terms of providing credit limits to customers that we want to fund. So what essentially we've had to do at ScotPac is we're now looking at limits, unsecured limits. But what we're saying to ourselves is, do we have actually a clear way out? What's the guarantor's net worth? What's the balance sheet? Is the business or the directors a property owner, or is there an invoice funding solution at the back end which would give me a clear strategy out? So right at this point, if I'm looking at the sort of deals I'm doing a lot of trade finance and an invoice funding solution, because I know that when the guy purchases the goods, I've got a way out in that I know he's selling those goods.
It's funny you should say that, Patricia, because I think that's actually key. I think that there's a lot of clients that haven't been made aware of. There's a lot of questions that, as a broker, we need to ask our clients. But at the same time, if I'm asking my client, well, hang on, and my client comes back and says, well, hang on, Chris, why do you care about my property security? I thought this facility was just secured against my payments. Then sometimes that's a harder pill to swallow. And to your point, the way out for those people that are new to commercial lending, the way out shouldn't be anything new to you. If you're doing commercial lending, every lender wants to know their exit position for short-term style lending. But every lender typically in working capital, they want to get a sense of, well, okay, are they going to get their money back? So interesting you sort of put that together. Brendan, I know that you and I have worked on some unsecured facilities as well. What are the ways in which you guys are viewing clients in terms of how are you guys getting that level of comfort? Are you with me? Have we had our first casualty? Hey, Brendan. Hey,
Sorry.
there you are.
Sorry, guys.
Are you all right? That's okay.
We're certainly traditional needs. So, we're looking at the financials of the business. We're typically wanting the business to have a couple of years' profits behind them. And
sorry, Brendan. So just because I can't hear you.
Can I help?
There we go. Yeah, I just thought I'll kind of chime in there. So bottom line is, Brendan, you need to see a more profitable business for a trade finance facility than you would for a debtor finance facility.
can you hear me, Chris?
I can now.
Okay, sorry about that. Yeah, look, I was making really just to say we use pretty traditional profitability measures typically to put the limit in place, and with a little bit of flex for COVID type scenario. So the moment we've had good strong years over the
Brendan, your mic's terrible, mate. Patricia, I might just cut to you for a second there while Brendan's sorting out his mic.
Okay.
In terms of the positions in trade, can you give us an example of some of the, just maybe one or two examples of the sort of client types that you've had the most success with trade finance without having to lean on property or debtors at the same time in the last few months?
Well, if I had to do that, then I'm actually looking for trade finance to qualify for a standalone trade finance without any sort of backing. Then I would have to look at businesses that are profitable, businesses that basically have a positive tangible net worth with no creditor pressures and a nominal ATO arrears. If not, I'm prepared to take a little bit more risk if there is a clear way out. And that means, if without leaning on property security, at the very least, if I've got an invoice finance solution or even asset finance, Chris, with a lot of asset finance brokers, you have actually secured leasing solutions for them at this end, but it's about assisting them to bring the actual goods or equipment in from overseas. The concept's the same. It's trade finance. We're actually helping companies do that because I know I have a clear way out.
It's an interesting one. I think that a lot of the different transactions that tend to lean on that additional security, it can become part of the overall component. And I think for the people that are attending Broker Illuminati, they've seen, we've talked about private lending this morning, we spoke about debtor finance, and obviously we're getting into a lot of the nuts and bolts tomorrow morning. For a business that is struggling, trade finance traditionally is not going to work for them. Fair to say?
That's right. That's correct.
So obviously in a post-COVID environment, even though there is a lack of appetite for those businesses that don't necessarily have the profitability, there is certainly ways in which they can be utilised as part of an overall solution. Brendan, I'm loving having you back. There you go, you're back. You're back. That's beautiful. Excellent. Mate, we were talking before just about how businesses with trade by itself as a standalone measure seems to be difficult for many of the businesses during COVID, but I believe that you guys have a fairly objective view to clients who potentially can't get trade credit insurance if they're still profitable.
Yeah. Look, the honest truth, guys, is trade financiers, we use insurance products to underpin our product, and the trade credit insurance basically went to water. So there wasn't any great science. We just kicked a whole bunch of share capital into our funding warehouse so that we no longer required the insurance. So we're fortunate that we were in the position to do that. And had we not have been able to do that, then certainly the limits would have been impacted for our clients. And so it was a really testing time, and we're very fortunate to be able to do that. So now different businesses, now of course we still want those clients, we make the same credit decisions we made before. So we still really want those clients to be profitable, just that we don't need the cover to support the limit.
Okay, so we've established that trade credit insurance, it's all too difficult, right? Like, should we even be talking about this? It's COVID, everyone's financials are wrong. No, you're a massive advocate, Brendan. I need you to tell me why we're still talking about trade.
Oh, well, look, we don't need insurance to provide the trade. That's the first thing. But it's still not that you.
That's a big deal to pull up on there, though. Not needing the insurance on trade is actually a big deal.
Oh, look, it's very good for us, but it probably doesn't change the position that we were in some ways pre-COVID. We still make the same credit decisions. So the same client that would have got the limit before is still getting the limit in a COVID environment. And that is a big deal, because had we not taken action on the funding warehouse, then that wouldn't have been the case. But look, there are the insurers in the Australian market probably have been particularly difficult, and I expect that providers will use overseas insurers in time that are stronger. So I think it will be temporary, that problem for trade financiers other than Octet, and certainly some of those may well do exactly what we've done and go without.
Guys, I'm going to ask you a few questions, because there's a few people on the call that might actually want to implement some of these. And even though we've talked a bit of doom and gloom here, there may well be some clients out there that really benefit from this. And look, there's tons of different ways people can do working capital. And I think that the reason why we wanted to have a session around trade today was really to make sure people were aware, hey, there is other options. It's not just your fintech style business loan. It's not just your property backed overdraft. There's tons of different ways out there. But what two questions, Brendan, if you had to, would you ask a client to ascertain whether there's a need for trade?
Well, I think I'd really want to be understanding the movements in his purchases. I'll give you, maybe if I talk a specific client example. So for many years, I've been a debtor financier. Trade's newer to me. And I've provided a lot of debtor finance for clients that are in the rag trade. Now, a lot of those clients, even though the debtor finance is of some use, when those clients need to be ordering their product from China, so they're typically paying deposits in April, May of 30% of order, and those goods are being shipped to Australia to arrive in time for the lead up to summer. So typically autumn. Now, typically August, September. So what you can see is for the rag trader, they typically will have a very low debtors volume in that period where they need to be paying the deposits. So you need to understand for your client, when is your big demand for cash in terms of goods inwards? And so for those guys, they really need that facility to pay deposits in in April, May. We're providing a trade facility that will facilitate those deposits, will then enable them to clear the goods and put them on the ship, say July, August, to arrive here in August. And potentially they're also taking a debtor finance facility to clear out that facility. So, you know, I would say you definitely need to understand those, the timing of purchases and the seasonality of the business.
Okay, that's a really, so okay, for you it would be understanding the seasonality of cash flow. Patricia, I'm not gonna let you off easy.
Yep, that's all right.
You cheated before.
Yeah.
So obviously the easiest question I think you could ask would be, do you get a discount if you can pay your suppliers early? So I'm not gonna let you, you have to come up with another question. What other question would you ask to find out whether trade's gonna be most appropriate for a client? What's going to make it easy for you? But,
No,
hey, look, you can simply
what other question, if it's going to be appropriate? Well, you know what, Chris, the key thing is, you know, trade finance, when we're thinking trade finance isn't going to work for a client if their their stock turn isn't going to turn inside of that 120-day cycle. And the other issue, well, the other benefit, I think I've thought about it, is that growth is a key factor. If you want to grow and you need to buy the stock to bring in to fulfill the order, that's what I would ask the client.
Okay.
Yep.
Yeah, that makes sense. So we've talked about what we're going to ask clients. Now, what are we going to do as a broker? Like, Brendan, great example. You've been on me for ages. Why don't you do more trade? Always. You've always said, why don't I do more trade? In fact, Patricia's hasn't been too far off the mark either. So with that in mind, tell me, you're running Mark or Todd's or my business or some of the other people that are on this call. What are two things you do running a broking business to get more trade clients?
Look, I'd definitely be talking to clients about their banking facilities and whether they're experiencing any strain there. I think that's a really big indicator. So about 50% of my facilities are a top-up facility that just sits in behind the bank. And it's really easy to put in place. I don't need a deed of priority. I just take a second charge. It's like shelling peas. If a client needs additional trade finance, it's such a simple and easy way to do it. So you know, talking to client about your bank's trade facility and whether you have some you know, tight cash periods is really key, I think, for trade.
Interesting you made that point before about taking a second charge. So we haven't this year provided anything around PPSR and charge. Last year, you can recall, we actually had a PPSR expert provide a paper for our attendees about what the different charges are. And we didn't really, this year, we haven't really talked to that. But it's probably one of the areas that hasn't been covered that well today, and one of the areas that seems to be quite critical, and that is what the actual security registration is. So we've talked about someone being unsecured. We've sort of alluded to the fact that you need, you know, there needs to be a level of security. So are we saying that with trade, we would look at taking a second or first charge over like an old AllPAP or the old GSA? Or
yeah, very much so. Very much so. And look, I can't speak for all the trade financiers. Some will and some won't. But look, we at Octet, we very much see ourselves as very happy to play a supplemental financing structure. So, for example, a client I did recently had a facility up in Newcastle with his bank, told me how much he hated his banker, when actually his banker was doing a very good job. What the client was actually expressing was simply that the bank wasn't providing enough funding in his peak seasonal requirement. So we paid his bank down a little bit, so they're a little bit more comfortable, and gave him $1 million trade facility, which I think, you know, he'd probably only use that 4 months of the year. The bank has a first charge over the assets of the business. So when you run a PPSR search, you'll see an all-PAP held by Westpac, and Octet just take a second ranking charge behind Westpac. And we don't seek to interrupt with a deed of priority. So if the client wants to borrow more money from Westpac later on, he's more than welcome to. We're just sitting in there providing, well, in that particular case, we've really we've improved the bank relationship. There's a bit more less strain on that relationship. And when the client's experiencing his boom times into Christmas, that's when the Octet facility is kicking off. Now, the Octet facility is slightly dearer than his bank facility. So that's why we thought it made sense for him to leave that, the existing trade facility at Westpac rather than bring it over to Octet.
It's an interesting one. I think that this is an area that there's a lot of lenders newer to the market that are trying to provide quick, I don't want to say quick and dirty, but they're providing smaller size facilities in trade, which I think are blurring the lines a little bit with an unsecured loan. And I think that the different security and the price points are behind that. I think it's just a few points for the few people that are with us. Just wanted to emphasise, it is very, whilst we're going through this in some detail, both Brendan and Patricia happen to be two of the very best BDMs in debtor and trade in the country, bar none. There's no need for a head wobble or anything like that, Brendan, or for Patricia. It's pretty fair to say that there's a lot of people that do the rounds in this space, and these two are definitely two of the best. So you can also feel very comfortable reaching out to either of them. They've certainly forgotten more than I'll ever know in debtor and trade. Patricia, with this in mind, I owe you the courtesy of the same question before we finish up. And just while we're finishing up, just guys, again, this session's about yourselves. If there's things you want to know, please use the chat function. Please make sure you interact with us and let us know what you'd like to know more about. So please take advantage. Patricia, you get to run my business. You get to run some of the other brokers on this call. What's the two things you do to promote trade finance amongst our clients? What would you do if you were us?
Well, can I just start by saying that, everyone's talked about the pandemic and COVID, and, and at the start, sure, that there was a disruption in the supply chain, but just so you know, in the last quarter, we've actually written about 35 million just trade finance transactions. And it's unbelievable. And a lot of it, we're structuring it. Sure, there's a few standalone transactions where they're really stronger businesses where, we've actually, because the directors or guarantors are asset backed, we have actually provided them with a standalone unsecured limit. And if you looked at their business model, these are businesses that have become successful because they sell online. Our online traders are doing extremely well. And then, of course, the other transactions that we have done, clients that where we can actually structure trade transactions because there's an invoice finance transaction, and we've been able to take that risk to enable us to write all this 35 million worth of work. So what I would say to you brokers is, have a look at your client base. If your client is a retailer, is an importer, wholesaler, clients that actually buy stock to hold or to replenish, they will all need trade finance. Look out for that opportunity and come talk to us.
Great point. I'd agree. There's obviously a lot of different aspects that we could be doing better as brokers. For me personally, I keep coming back to the simple question because, from a broker's perspective, there's a lot of things we look to cover in our conversations with clients. And I think one of the ones that we tend to, the simpler the better. I think everyone likes to keep it simple, clients as well. So really, the easiest question I find to ask, and what I'm trying to ask more of is, would you qualify for a discount if you paid early? It's a fairly simple question. The one difference from trade and debtor that we haven't covered today, of course, it's a fairly obvious one, is that with debtor finance, that's only really possible when we're doing business to business. Whereas if you've got a client that's selling to retail customers and consumers, then really trade finance is that option that you can look at in terms of the cash flow cycle and looking at those sort of push-pull areas. Before we sort of wrap up, just wanted to give everyone that last opportunity if there's anything else you'd like to ask or learn more about today. Obviously, for many of you, you've done very well. I think for a few people, this is their third session today, so good on you, and glad you're getting a lot out of Broker Illuminati. As I mentioned with every one of our sessions, the reason why this is called Broker Illuminati is to really illuminate and demystify some of the areas in commercial lending that are very, very useful for you and your clients to provide alternatives. And obviously, when you've got people like Patricia and Brendan in our corner spending time with us, it makes things a lot easier to have confidence in our alternatives when you've got people of their stature and experience in the industry. So thank you to you both. For those people that are part of today's session, some of the other sessions you might like that are coming up. The structuring session tomorrow morning is fantastic. It's basically around what happens to your clients that aren't going to survive COVID. What's next for them? We've got sessions on tax debt tomorrow. We've got sessions on actually valuing equipment. The second-hand equipment market has changed massively. Be aware for that. I'd certainly encourage you to check out our session tomorrow about how debtor finance will help you write asset finance. That is the only session that isn't a conversation. So I'm a big fan of the casual conversation format. I think more people want to hear that style of format so they can tune in and out. That session is actually a behind the scenes for me in terms of how it's been such a large chunk of my business over the last 2 years, and also will tell you all the mistakes I made, and there's lots of them. I found it's a very good place to learn making the odd mistake. There's a great session tomorrow also around, there's a few mortgage brokers on the call. Best interest duties obviously changed a little bit, but we have a session that not a lot of people have tuned into, which is a financial planner's perspective. So obviously you've got to remember financial planning had best interest duty and their world changed dramatically. So if you're interested in that you'll find that session's a little bit different to what you'd think. And that's a very short session in the afternoon. Look, I won't go plugging the full agenda. Thank you very much for all those who have attended and supported Broker Illuminati. Thank you very much to Patricia from ScotPac and Brendan from Octet. Thank you very much for your time